All right, everybody, what is up? Welcome back to the channel. Welcome back to another video. I appreciate you guys all being here. So today's video is actually going to be a rule that I have when scalping, going in a little bit into my strategy that I used recently that I've been scalping with, etc. I'm up 5 figures this month. This will be the second month in a row that I've profited over 5 figures trading. It's blessing. It's awesome. And I'm here to share it with you guys. I'm here to show transparency. So I will be showing proof that I'm up 5 figures when we get onto the desktop. And yeah, I want you guys to learn. I want you guys to feel like you're getting value from my videos. So I'm always going to show proof. I'm always going to show that I'm actually doing what I say I'm doing. And then I'll go ahead and get into the actual strategy and the rule that I have when I'm scalping and some trades that I've taken this past week, etc. So without further ado, guys, if you could like the video, subscribe to the channel, it really helps out. It really helps push the content to more people. My email is in the description if you want to apply to be mentored by me and apply for the Discord room. Without further ado, guys, let's get on to the desktop. Let's show you guys proof of this 5-figure month, and let's get into the rule and strategy. See you guys then. All right, guys, so now that we're here on the desktop, I actually want to start off by showing you guys the proof that I promised I would show you. Because what is a trader? What is his education? What is his promise to help other people out if he is not being transparent himself? So as you guys can see, here we have the month of July. This month, 2025, we are up about 19.3K. And it has been an absolutely beautiful trading month. Only one loss, still here to show it. Never gonna be not transparent with you guys, but it's been a beautiful month of July. I am so blessed to be in the position I am in, and I just want to show you guys that for transparency and proof, because there's so many traders these days that will say things about all the things that they're doing and, you know, join my course because I'll make you all this money, but have they shown a statement? Have they shown a trading journal, a reputable trading journal like TRADEZ? So without further ado, let's head on to the charts, and I'll show you guys a few simple rules I use when it comes to scalping, and actually a trade that I took just today that gave me a 3.5K day when trading. So without further ado, let's head on to the charts. Okay, guys, so now that we're actually on the charts here, I'm going to go over a few simple scalping rules that I use when I am looking to enter and exit trades. The first thing I do want to mention is that trading journal that you just saw over here. This is TRADEZ. I am partnered up with TRADEZ. They are one of the most reputable trading journals out there, created by Umar Asharov, one of the most reputable, transparent, good traders out there. This book, trading journal, whatever you want to call it, it has it all. So when you are at checkout, please use code JMTRADEZ for a percentage off. And as well, today's trade that I took, one of the accounts that I used was my Apex Trader Funding account. I am as well partnered up with them. They are running amazing sales right now. Apex Trader Funding, trusted, been in the game for a long time, one of the biggest prop firms out there. Use code JMM when you are at checkout for a percentage off as well. So to start, the first rule I want to outline when I am scalping, because you know that is what most traders do. It is no secret that a lot of traders are scalpers. They want to be in and out of the market. They want to enjoy the freedoms of trading and go on with their day. So the first rule that I outline for myself when I am scalping is no aggressive entries. What is an aggressive entry? An aggressive entry is when you take an area of interest, a key level, a support, resistance, supply and demand, an imbalance, you know, just any area of interest where price looks to react off of it, and you are going to just put a limit order there, and as soon as price taps into it, that's it, you're in the trade. So let's say right here, we have this area of demand right here. What a trader would do who takes aggressive entries is put a limit order right on top of this area of demand. So as soon as price comes down to this area, they're tagged into the trade. They do this to try to get the best risk to reward possible. But what I was noticing when I was taking aggressive entries like this is, yeah, here and there, you'd get a good move like that and you'd get a good risk to reward. But a lot of the times you are taking unnecessary losses that completely could have been avoided because price just wants to go all the way through, when in fact you could have just waited for price to make a reaction off the area just like it did here, and then you'd have a better confluence on what you were looking for. So what do I do instead? When price comes to certain areas of demand, I am looking for reactionary candles, engulfing candles off the area, bearish or bullish hammer candles off the area, rejection candles where price tried to come down into this area here but ended up closing up in here. Things like that help avoid unnecessary losses. They help you take better trades. That is one thing I cannot stress enough to people, is do not take aggressive entry trades if you are not experienced and good at it. If you've been doing it for years and years and years and years, then obviously yes, and you feel comfortable taking aggressive entry trades, then sure, no problem at all. If that's what works for you, do so. But if you are a new trader looking for ways to get into the game, looking for ways that you can just keep avoiding unnecessary losses, etc., I would start with no aggressive entries. So let's get on to point number 2. Point number 2 is to always have an area, a key level, an area of interest where you are looking to take a trade. You never just want to be trading in random areas in the market. You want to be trading at areas where you know price is going to potentially have a reaction. The higher time frame that you draw out these areas, the better. So what are some areas that I like to draw out? I like the 15-minute time frame and the hour time frame. So let's go over some certain areas that we can look to draw out. We have an area of support right here. This is a beautiful area of support. As you guys can see, price continued to bounce off of it, comes back down, bounces off of it again, comes back down, and it looks like it's giving us a reaction to potentially bounce off of it again. You have an area of resistance up here where price bounced off of it here, comes back up, bounces off of it again. These are clear areas where traders are clearly getting in the market, where the whales are pushing down and pushing up the market on the higher time frame. This is the 15-minute time frame. What else do I like? I like areas of supply and I like areas of demand. So what do we have here? We have an area of demand right here where price is currently retesting, and like I said, could potentially give us another push to the upside. An area of demand is where we have this sell down before this huge buy up. Now, just like you have areas of demand, you also have areas of supply. What do you have here? You have a nice little buy up before a huge sell down, and there you go. That's a nice area of supply. Of course, it didn't hold. It didn't give us the move like that, but not every zone is going to hold. What are some other things that I like to use? I like to use imbalances. I have an imbalance right here. Here's a 3-candle pattern that involves a gap. So just like this, you can create an imbalance, and if it'll let me drag it, there you go. Just like that, you can create an imbalance. There's a 3-candle pattern right there. Obviously, there's bigger ones that can be created, but that right there is an imbalance. And look what happens as soon as it comes back down to the imbalance. You could take this reaction off of here, stops below here, and you would have hit a nice just over 1-to-1, just something simple like that. So you never want to just be trading in a bunch of areas, because look what happens if you're just trading in these random areas. You're going to get caught up in crap like this that nobody wants to be involved in. You're going to get chopped out of trades there. So that is something that you always must take seriously, is always be trading at an area of interest. Whichever ones work for you does not matter to me. I use supply and demand, I use support and resistance, I use imbalances. Whichever one works for you, that's the one you should use. But you never want to be trading in the middle of just random chop and stuff like that. You always want to have an area of interest that you are trading at, whether, like I said, supply and demand, support and resistance, imbalances, EMA levels, etc. It's up to you. I'm never going to tell you how to trade. Whatever works for you, do it. So the last rule, my kind of third rule when it comes to scalping the market, is actually when to exit trades. And that is, I never, ever, and this is just me, you do you, this video's recommendation from me, you never, ever, ever want to try to extend your take profit and extend your stop loss in these scalping trades. So for example, we have this area of support that price came to, okay? We get a nice reaction, we get an engulfing candle off the area. We look to potentially take a trade at the break of the candle right there, stops under here, maybe we can target this area of next resistance up here. So what do I never want to do? I never want to see, oh, price is engulfing pretty high, so let me try to move my stop all the way up here. Then look what happened. Price came all the way back down, would have hit your break even, would have hit your stop loss, and you just gave up on 2R of profits just because you tried to extend it a little bit. Or if you notice price coming down a little bit and you're like, oh my gosh, I think I can, extend my stop loss and get another move to the upside or something. And then you extend your stop loss down here. And look at that. Price comes down and maybe you hit it there and price hits you out and you lose more than you originally planned to. You cannot extend your stop loss and take profit. You are a scalper. You are looking to get in and out of the market. You are not looking to hold trades forever. Okay? Do not try to extend stop loss. Do not try to extend take profit, because that is how you ruin profitability. volatility. So without further ado, guys, I hope you guys really enjoyed this video. I hope you guys got some tips and some pointers of the 3 things that I like to tell myself when I am in a trade and or before entering a trade. Once again, use code JMM at Apex Trader Funding for a percentage off, and code JMTRADEZ at TradeZella for a percentage off. I love you guys. Don't forget to subscribe, like the video, and I'll see you guys in the next one.